All right, welcome. Today, we're cutting right through all the hype to give you a real, practical guide on how to invest in blockchain technology. This space is growing up fast, and figuring out how to get smart exposure is more important now than ever. Okay, let's jump right in. So the first big signal that this whole thing is hitting a new level of maturity, it's the big money, the institutional players. I mean, when you see names like these, the absolute giants of finance, start to build actual products, that's a huge indicator. For an investor, what that really signals is the potential for things to get a little less wild, a little more regulated, and way more accessible down the road. They're not just playing around here, they're putting serious cash to work. With all this potential floating around, how do you, an investor, actually get involved? How do you go from just hearing about it to actually doing something about it? Well, let's break it down into a clear, actionable playbook. So, when you boil it all down, there are really three main ways to get investment exposure to the whole blockchain world. Each one has its own vibe, right? Its own set of risks, its own potential rewards, and its own level of difficulty. We're going to walk through all three so you can figure out which one, or maybe what mix of them, feels right for you. First up, we've got the most direct route, just buying the cryptocurrencies themselves, like Bitcoin or Ethereum. This means you own the asset, period. It gives you 100% control. You can even do things like staking, which is kind of like earning interest on your holdings, and you're not paying any management fees. This is without a doubt the purest bet on the tech itself. Okay, strategy number two is a more indirect way to play, and it uses the good old-fashioned stock market. So here, you're not actually buying the crypto. Instead, you're buying shares in companies that are building out the ecosystem. Think crypto miners, the big exchanges, or even companies that just hold a ton of digital assets. It's a way to invest in the theme using a totally normal brokerage account. And our third strategy is for anyone who loves diversification, blockchain ETFs. So an ETF is basically a basket of stocks that you can buy all in one go. And in this case, that basket is filled with shares of all sorts of companies in the blockchain industry. This approach is great because it spreads your risk out instead of betting on just one company to succeed. So we have our three strategies. Now, the big question is, how do you choose? Well, the decision really comes down to a classic trade-off. It's all about risk versus control. How much control do you want, and what kind of risk are you comfortable with? Let's put them side by side. And this right here illustrates that trade-off perfectly. Owning the crypto directly, you get total control, no management fees, and maybe even some yield from staking. But you're on the hook for keeping it safe, which can be tricky. On the flip side, stocks and ETFs are super easy to buy in your regular account, and they're regulated. The catch? You're getting indirect exposure, and you have to pay those management fees. So it really boils down to what you value more, control or convenience. Ever wonder how the pros handle this kind of volatility? Well, a lot of institutions take a really measured step-by-step approach. They might start with a tiny pilot allocation, maybe just 1 or 2% of a portfolio. Then, if things go well, they slowly scale up over a year or more. And they often use strategies like dollar cost averaging, which is just making small, regular purchases to smooth out the crazy price swings. Honestly, for a regular person, this is a fantastic model for building a position without all the stress. Okay, now let's shift gears and look ahead. What are the big trends that could really shape this market over the next couple of years? Keeping an eye on what's coming is absolutely essential for any investor, and there are a few major things taking center stage. One of the single biggest trends, and you're going to hear this acronym a lot, is the tokenization of real-world assets, or RWAs. Basically, this is the process of creating a digital version or a token of a physical or financial asset and putting it on a blockchain. We're talking about things like tokenized real estate, private loans, even US treasuries. This is the massive bridge being built between traditional finance and the new digital world. And the growth, it is absolutely explosive. On-chain data is showing the value of these tokenized assets jumped over 230% in just 1 year. This isn't a slow, gradual shift, folks. It's a rapid expansion, and it's happening because big institutions are realizing how much more efficient it is to bring these old-school assets into a blockchain environment. Now, beyond RWAs, there are a few other huge trends to watch. We're seeing the rise of Layer 2 solutions. You can think of these as express lanes on top of the main blockchain that make everything faster and cheaper. We're also seeing AI get integrated to help with security and operations. And maybe the most important one of all, we're finally starting to get some regulatory clarity, some rules of the road, which could be the thing that opens the floodgates for even more institutional money. Okay, before we wrap this up, we have to cover what is probably the most important part of any investment strategy: what not to do. Seriously, avoiding the big mistakes is just as important as picking the winners, especially in a market that's this new and this wild. Let's walk through 4 classic, critical pitfalls. First, using too much leverage. Borrowing money to invest is like pouring gasoline on a fire in this market. It's a recipe for disaster. Second, ignoring smart contract risk. Chasing those insane, too good to be true yields on brand new, untested platforms is just asking for trouble. Stick to the ones with a proven track record. Third, not diversifying. Come on, you know this one. Putting all your eggs in one basket is never a good move. And finally, forgetting about taxes. Every single trade you make could be a taxable event, so keeping good records is an absolute must. So, as we've seen, blockchain is steadily weaving itself into the fabric of our financial system. The opportunity here is clearly significant, but hey, so are the risks. At the end of the day, the ultimate question for any investor isn't just about if you should get in on this trend, but about how you're going to build a smart, thoughtful, risk-managed strategy to do it. Thanks for tuning in.